Two tech titans in talks for an AI marriage. I'm Lisa Bernhard with Reuters, and I'm joined today by Carey. He's portfolio manager at Carnegie Investment Counsel. Chris, Apple is in talks with Google to build its Gemini AI engine into the iPhones. Now, that's according to a report out from Bloomberg News today. Shares of both companies are up, particularly Alphabet's. What would be the significance of a deal if it went through?
I think it's a pretty significant deal, especially for Apple. Apple is one of the last major tech companies that is yet to really talk about their endeavors into the world of AI. They've been they kept their details very close to their chest on this one. So I think it's very encouraging that they've chosen to partner with Google, a company that they have a long-lasting relationship with in terms of Google being the default provider for search. Apple, has had quite a rough going in recent times with device sales slowing down. They recently abandoned their project for a car called Project Titan. And so I think that this is quite encouraging to investors to see that Apple is trying to take this seriously. And it's great for Google too, namely because they've had some bad press recently with their botched launch of Gemini, and they've scaled that back since. I've always been a proponent that Google has a massive data advantage in terms of the quality and the quantity of the data that they have. They've been working on AI for multiple decades. They're going to get this right. And Google's currently going through that transformation of going from an information retrieval business to an information interpretation business. So I think this is great for both Apple and for Alphabet in terms of their prospects for making an impact in the world of AI in the future.
Apple also talked with OpenAI, but if it goes with Google, what does this mean for OpenAI and its backer, Microsoft?
I actually don't think it's all that impactful. As I mentioned, Apple has a existing search relationship with Google, so it's kind of a natural progression of that. They already have the ties, their teams work together. OpenAI has a ton of demand from companies across multiple industries. And there's more than just these two players as well. We're going to see as this technology iterates more and more that it's going to be easier for companies to launch their own large language models. And so OpenAI has a great partnership with Microsoft in terms of their Copilot offering. And I don't think it's really going to bother them all that much.
In other AI-related news, server maker Supermicro joined the S&P 500 today. Shares were up roughly 6% early. They've since reversed course. At last look, they were down 8%. The broader NASDAQ is up today. What happened?
Well, I think the one thing we haven't mentioned is that it's up 1,000% over the last 12 months. And typically what happens is back in the day when a company was going to be added to the S&P 500, information was not as freely available as it is today. So there was actually an advantage of buying these stocks ahead of their inclusion into an indice like the S&P. Now everyone knows that. This is a classic buy the rumor, sell the news type of event. But SCMCI is a great company. They are undercutting all of their competitors in this space, which makes their demand has gone through the roof. They have a really, really tight relationship with NVIDIA. There's a lot of exuberance in the name, but this is classic what happens with names like this. In the run-up to these additions, they are flying, they're outperforming the indices, and then once they're added, that exuberance comes off a little bit and they start to moderate.
Chris, I can't let you go without asking you about the U.S. Federal Reserve and its two-day policy meeting, which starts tomorrow and concludes Wednesday with a press conference by Fed Chair Jerome Powell. If his language is more cautious about when rate cuts might start, do you think that investors will react negatively, or are we off that roller coaster?
I think in terms of sentiment for the market, we need to just zoom out a little. If we look at the path of inflation over the last 12 months, it's come down significantly. I think some market participants are expecting it just to be a straight line down and that's it. But the Federal Reserve said that they wanted to wait for more data before they would actually start to cut rates. They'd rather be late to the party in terms of cutting rates than too early for fear of starting a new bout of inflation in the economy. So there's always the chance that we could actually see, instead of 3 rate cuts potentially this year, that it could actually move closer to 2 with their economic projections that they're going to release at this meeting. That might lead to some short-term volatility, but the real story is that corporate earnings are up. They're up significantly since pre-pandemic, and that's been the main driver of the stock market. You also have the fact that consumers are spending like never before. Delta said that 9 out of their 10 best revenue days have been within the last 10 weeks. You also have the fact that the labor market is normalizing. It's extremely strong. I think that those are going to be, any sort of deterioration in those areas is going to be what's going to drive some negativity in the stock market over the short term versus what the Fed says.